welcome to the AlphaMind Podcast. I'm your host, Steven Goldstein. My usual co-host, Mark Randall, can't be with us today, so it'll just be me talking about a subject which is very dear to our hearts and which we think is possibly, if not the most important, one of the most important but overlooked aspects of trading. And we come from it from this angle, as we do in most of our work, that there's what you do in trading, you being the person and how you do it. And we don't really cover too much of that in this podcast. There's plenty of podcasts that talk about techniques, strategies, analysis, different methods, different approaches, different tips about how to engage with the markets from the various different angles. But there's another side, which is the angle we come from, which is about you, the person doing the trading, how you are, how you engage with your process, how you engage with markets, and how that comes back on you and affects your behaviors and affects the things you do and the way you do them. And it's the part which we feel either doesn't get enough coverage or doesn't get appropriate coverage. And people broadly talk about it under trading psychology. That's a term which I don't particularly like, because psychology is something you study from an academic perspective. But this is about you, the person. This is so much more than just your psychology. It's about you. It's about how you turn up. It's about your being, your presence, your state, your philosophy, your approach. How you engage with other people, how you engage with the market. You could call it, there's social factors, how you think, cognitive factors, your neuropsychology or neurology, the way your brain works and functions, your biology, the way your body works and functions. It is so much more. And I like to call it trading performance, because it relates far more to the world of high performance, the world of sport, the world of music, the world of arts, the world of drama, the world of entrepreneurship. You know, the way you make decisions, the way you behave, the way you respond. It's so much more than just psychology. And, ultimately, it's you. You're the person doing the trading. You're the person making the decisions. You're the person dealing with the consequences. You need to be present, or as present as you can be. At the same time, this job, the markets, the world that you're within, it's trying to knock you off presence. It's trying to knock you down. And you have to recover. You have to come back to yourself. You have to get back to that state of presence in order to be able to engage effectively with it. And to do that, you have to reset. You have to be able to reset. You have to master the reset. And that's what we're going to talk about in this podcast. That's what I'm going to talk about. That's what I'm going to reflect upon, because it's such a big part of the work I do with people as a coach. And it was also a big part of my journey as a trader for 25 years. So I hope you enjoy this podcast. And if you do, do feel free to reach out and let us know what you found useful. It's always interesting to hear other people's perspective. Before we head into this week's podcast, a quick thank you to our long-term podcast partner, the Society of Technical Analysts, the STA, who provide outstanding educational services and support services for people across the world of trading. Amongst their many outstanding services, the STA offer their brilliant home study course in technical analysis. This course is offered to listeners of the AlphaMind Podcast at a discount. You can find out more about this discount by going to our website, alpha-mind.net. The home study course has been put together by many of the world's leading technical analysts exclusively for the Society of Technical Analysts, and takes you into a far deeper understanding of what technical analysis is and how to apply it effectively. Now, on with this week's podcast. In this week's episode, we chose to do an episode without a guest because I wanted to talk about a particular topic, a particular theme, which is, I would say is possibly the most important skill or behaviour to have that supports and underlies a strong and effective trading process and trading practice. And it's something I call the reset. Now, readers of my book, Mastering the Mental Game of Trading, those who managed to stay with it long enough to get there, would have realized that at chapter 32, I spoke about this, the reset. That's page 279. I do look back on my book and thought, well, I wish I'd have actually introduced this much earlier, because as I've done more and more work in this space as a performance coach with people from the world of trading and with businesses in the world of trading, um, it's almost come back to me and dawned on me that yes, this is the thing, this is the difference, this is the hallmark of great trading, the ability to reset. So I'm going to talk about that today, and I'm going to share with you over the course of the next 30 to 40 minutes, maybe a bit long, depends how generous I'm feeling, my reflections on this key topic, which has, perhaps unknowingly to me, been a key concept that has shifted the needle for so many people that I work with as clients. But perhaps a little bit more about my history first, because I perhaps don't talk about this enough on the podcast, and perhaps we don't. We just perhaps share with you that we've been in the markets many years. I started in the game of trading in the mid 1980s as an investment bank trader working for a Japanese bank in London. So maybe in a slightly different role to many of the listeners that are out there who I gather most of you are working for yourselves, although we do have a lot of professional traders out there too. Um, and retail was much less of a thing in those days. You know, the people who work for themselves tend to be people who worked on exchanges and had paid for a seat or was sponsored for a seat, and many of them became legends, and they put their own money in the market. Now, of course, it's far more prevalent. Far more people are working from home, doing their own trading. So I just want to give you my journey into trading a little bit. I worked in that space for nearly 25 years, always for an investment bank, always as a bank trader, but perhaps not as a typical bank trader. I was perhaps more proprietary than I was a market maker. I did have experiences and times where I was involved in making markets, which will not be the sort of experience many of you have, although you may use styles, which I call the house style, which are very similar to being a market maker. But I was more proprietary basis, involved in the early days in arbitrage, and then latterly involved in sort of swing trading or position trading. And that became my tool until I left the markets in 2009, 2010, following the financial crisis. And generally, banks were turning their back on proprietary trading, and particularly single trading proprietary trading. So I found myself at a career crossroads. And my original thought was to carry on doing it for myself or to go into the hedge fund world. But it was actually a conversation I had with my former coach, which I had a coach mid-career, which was life-changing for me as a trader, and gave me my own reset, which really powered the second half of my trading career, where I'd become stuck after a very successful early year period. I suppose you could say, I kind of lost my way mid-career, and working with a coach and resetting helped me enormously to re-engage with trading and to become far more successful as a trader than I ever was. But it was that conversation I had with my former coach in 2010, which was perhaps more of a, trying to help me find the way forward in the career crossroads I was at, and decide what form of trading I wanted to do. That actually, at his instigation, I decided to become a coach, which was completely a surprise to me. I had no plans at that point to do that, but I fell in love with the idea of becoming a coach, and that's the direction I went. And it was during my coach training, which happened over many years, and I went through a long period of training to be a coach, and then training to understand the philosophy of coaching, and then training to understand what what it is about us that becomes that helps drive great performance, and what is it within us that holds us back at times. And I went down the route of journeying into psychotherapy. Not that I became a therapist or a psychotherapist. You have to become qualified at that. But I began to explore that field and see how that could be useful in the work I did as a coach. And that's where I was really first introduced to this concept of the reset, although that wasn't the word they used, but it was a word I later applied to it. When I took that model and tried to give it a more a language that people in the field of trading or high performance or would understand and relate to. And this is where I'm going, because if I use my own story of my career, which I just took you through. So I was a trader, and it was perhaps after about 13, 14 years that I was introduced to a coach, just by chance. And I was fortunate that the company I worked for, the bank I worked for, um, encouraged me to engage with this executive coach, as they were called. And fortunately, they also paid for it, which was very helpful. But the idea was that it might be helpful in my career and where I was in my life. And after initially refusing and rejecting the idea, I came round to it with some gentle prompting from my line manager, who was a big advocate of coaching. Um, and I perhaps didn't realise, but I was caught in a spiral, in a vicious circle where my early successes in trading, early career successes that had taken me to a prop desk at a major investment bank, and then moved me to another bank where I was in a more senior role. I was gradually losing heart in what I was doing. Things weren't working. Often they were environmental factors that were getting in the way, I would say, more politics of the organization, politics of the company. But that was changing who I was, and that was changing how I engaged with markets and risk. And I was becoming steadily more defensive as a risk taker, which is always unhelpful, because this is a job you have to really be doing on the front foot. And I don't want to confuse the listeners, with the concept of being risk averse. That's a different thing. I'm somebody who was naturally risk averse, but that doesn't mean I was defensive as a risk taker. You have to, in my opinion, always be on the front foot, always on the offense, always looking to capture opportunities, to take opportunities. But I was, as I was becoming perhaps more frustrated in my work and perhaps in my life a little bit, um, I started to become personally defensive as a trader. That wasn't helpful. Um, and my trading was suffering, and it became a bit of a vicious cycle. Um, what we call a spiral, and anyone again who's read my book and has sort of seen my performance process cycle model will be conscious of this concept of the spiral. Perhaps I'll give a quick guide to the performance process cycle in a minute. Um, but I was going downhill, and as I say, when you go downhill, you become defensive. A defensive trader, and I mean in the sense that I was, is no good to anyone, particularly the trader themselves. And you start to see everything as a threat, everything as a danger, everything as a negative, and you start to lose sight of the opportunities that are in front of you. And you need to see those opportunities, because depending on your style, they don't come along often. Um, and in my case, they didn't come along often. And when they did come along, it was vital that I was there ready to try and capture them and to put my process to work to try and capture them, and then to manage them effectively, and try and leverage the opportunities to their fullest when they were there. But here I was, not seeing the opportunities. A fog, a mist was obscuring my vision, and everything was a threat. And even if there was an opportunity and I was taking advantage of it, I would then see the threat, and I would damage the potential that the opportunity had. So this is where I was at that point. And as I became more like that, I had this suddenly had this chance to work with a coach, and you know, it was a series of conversations over many months. I believe we had 6 or 7, some 90-minute meetings where we discussed everything about me, everything about my work, everything about what was what was my life, what was important, what was not important, um, and then how that was coming back to impact me in my work, and how that was affecting my behaviour. Um, and the coach themselves didn't really suggest any answers, but what they really did was they started to show me, or he started to show me myself, who I was. Um, it's a little bit like, if in the world of sport, um, you just play golf every week, and you turn up and you play golf, and maybe even you're a high ranking amateur or a professional, and you just turn up and you get on with it and you try and do your best. But you're not seeing yourself, you're not seeing your reality, you're not seeing the context you're in, the situation you're in. You're not seeing perhaps how you're changing, or maybe how you're becoming defensive, because that you're blind to that. Okay, you just notice maybe that you're struggling, and you fight harder and you try harder, and often that gets you deeper into the struggles rather than sorts things out. So then suddenly you have an opportunity to step away, step outside the game, maybe work with a coach who starts to reveal yourself. And maybe you start watching some videos, and maybe you start looking at those videos, perhaps with some commentary as well, and you go over it, and the coach encourages you to have an open mind as you're watching, and asks you what you're noticing, what you're seeing, what are you observing about yourself, what's changing, what's shifting. And as that golfer, you'd start to notice, I'm not doing this as well, or I'm trying things that are suboptimal, or I'm I'm engaging in what I would call lowest common denominator behaviors. And you can see your body language change, and you see perhaps you're trying something which you know with distance is unhelpful. And you get that because you're suddenly seeing yourself in that reality, and you're kind of and you've been slowly going into that, and that is the spiral. you know Another term to use is a vicious circle, but you can't see it because, really what you're doing is you're living it, and you're trying your best in your opinion, but you're not aware that you're going down that path, that you've taken a less productive path and a less productive way of doing things. um, so that was what the coaching experience was for me. Um, and that is when you then suddenly are given options. Okay, so when I said the coach didn't necessarily change things for me, the coach had to show me who I was, because nothing could change without me becoming aware of who I was, where I was, what my context was, what my situation was, how I was being. If the coach had just said to me, "You're being like this, that, and the other," I'm pretty sure I would have rejected it. But getting to see it yourself is really empowering, and that gives you options. Um, I didn't work with a coach beyond that. Had I done that, he may have supported me and guided me to sort of reset and develop those options. But nonetheless, um, seeing myself now gave me options. And I came out of that process. And we did do a little bit of work on that. Um, but I came out of that process suddenly aware of where I was, who I was, how I was being. And I knew, even though I didn't use the word, use the word, I knew I had to reset. I knew I had to change. I knew I had to do things different. I knew I had to get back on the productive path, the path that possibly I was on when I was younger, but I'd lost the way, which is a useful way of saying it. You know, my way to my response to some of the hurdles and obstacles and dangers that I'd faced may have been my adaptations to it, but they weren't always the best adaptations. So this was a chance to reset. And that's what I did. I reset. I was aware that, or more conscious of the fact that as a risk taker, I needed to be taking risk. I needed to be managing risk. I needed to do it in a way that would suit my personality, which was, you know, leaning towards risk averse. So I had to find a style and way of doing it that suited that, that could allow me to take a lot of, to get the size on that I needed to do. And, you know, again, perhaps this could be a conversation for another podcast. Um, People misunderstand the terms risk averse, and risk tolerance. It's more of a personality state, as much, perhaps more so than the way you do things. But you do need to do things that are aligned with that personality. So you can find risk averse people that take a lot more risk than risk tolerant people who don't always take risk because they might be hiding from it because they've not actually aligned themselves to a style and way of trading. As I say, that's a conversation. I digress. But I had to reset. I had to think about how I was doing it. One of the behaviors that I had done, or a practice that I had adopted perhaps in the years beforehand, that leading up to that point, was that I'd started to rely, I would say, too much on analysis. I'd started to over rely on analysis, such to the point that I'd become more analyst than risk taker. And yet, my job was to take risk. I was a risk taker. That was what I was paid to do. I wasn't paid to be an analyst. Of course, analysis is really important. It's a big part of the process of taking risk and managing risk, but it doesn't take over it. The risk taking is what you're doing. If you think about it, you can have one hat for analysis, for your analysis, and then another hat for how you take and manage risk. They're two different hats, which, by the way, was one of the adaptations I did. I realized if I'm going to take risk, I've got to put my risk taking hat on, my risk management hat on. Okay, it was an adaptation because I decided, okay, I'm going to do my analysis. Okay, I'm going to look at the markets. I'm going to try and understand the macro. I'm going to try and understand the fundamentals. I'm going to try and understand the technicals, the sentiment, the liquidity, all those different aspects. I'm going to try and do all of that, and that would perhaps help me shape my understanding of the market. And then I'll use my analysis, which my preference was for technical analysis, but taking into part all the other aspects to try and find opportunities. But then it was up to me as the risk taker. So think of it like an analyst and going, here's some ideas. You as a risk taker now have to put them into action and have to manage them. You have to enter, manage, exit, de-escalate. That's what you've got to do as a risk taker because that is the job. So that second hat went on for that. That was part of my reset, actually. You know, moving into perhaps two different identities within one role. One, someone who analyzes the markets, and another one, someone who takes risk. But before that, I'd become someone who was an analyst, really. It's taken over my risk taking. I was looking for almost perfection. As an analyst, which we know perfection impossible, and it's just going to cause you to really to overanalyze and then suffer analysis paralysis. So I had to scale back on that side of it, and reset myself. Um, but the, the reset is more than that. Okay. Um, the reset is is something that is part of yourself at all times, something you're always doing, something that you might reset on different levels in the big picture, which really that was a big picture reset. I was doing a career life reset almost. But then there's shorter term resets called a micro resets. Perhaps intraday, perhaps in terms of a position or an idea you have, um, perhaps intra-week, perhaps when you're looking at something, um, and you lose yourself in the reeds, in the weeds, in the sort of marshes, the boggy area when things aren't always clear. Um, so let me perhaps just go back to what I was saying before about this performance process cycle. Um, Maybe if I go back to what I mentioned, my book, Mastering the Mental Game of Trading. It's the second time I've mentioned it. I'm not afraid to plug it. It was published last January, if you're not familiar with it, by Harriman House, and it's in a way it was the book that I always wanted to have when I first started this job, all those years ago, that I didn't have, which really, how do you do this job, and how do you need to be to do this job, of trading? And I decided to write something that would have been very helpful for me then. Now, in this book, and of course, I couldn't have written it till many years later when I had experience and knowledge and know-how, and the time behind me as a coach, and some of the studying I did as a coach. In this book, I take this model from psychotherapy, which is called either the cycle of experience or the cycle of awareness, in a particular form of psychotherapy known as Gestalt, which is really a framework or a model for how we engage with our external environment and with ourselves as we're engaging with the external environment, and how we manage ourselves and complete our needs in a really healthy and productive way that keeps us balanced and sane and completing the task that we've decided to complete in the most productive and effective manner for both ourselves and for the task and for the purpose of the task that we're engaging with. And those tasks can be anything from, a life task, a career, down to an individual task, or even just part of a larger task. It can be how we conduct ourselves. So it's a very broad spectrum. But this framework, this model, this cycle of awareness, really captures that. And as a psychotherapist, it helps you as a therapist understand what the person you're almost have a roadmap for what might be happening for the person you're working with, and what might be things that are getting in the way of what we call the healthy completion of that cycle. What might be causing disruptions at the boundary between themselves and their external environment that may be throwing them off that cycle and causing an unhealthy completion or an incompletion even. So when I was introduced to that, I I straight away looked at that and I was like, wow, that's trading. Yeah, that's the task. The task is trading. Um, that's what we do. Each trade is a task. Each part of a trade is a task. All our trades together are part of a much larger task, or project. And this is this really struck me. And as I started understanding it and learning more about it, I thought, this would be interesting to perhaps represent in a more client friendly manner, to be able to talk about it with them and share it with them and explore it with them, not as a psychoanalytical tool, but as a performance tool to be able to perform more effectively.
We'll return to the podcast in a second. What are you doing to improve yourself as a trader? At AlphaMind, we work with traders from across the markets, both professional and retail, and trading businesses to help people improve their performance. A focus on developing performance is one of the few areas that is very, I suppose you could say, under-practiced in an industry that is really a performance industry, and where developing key aspects, key behaviours, key mindsets can have a huge impact on how you work, how you perform, how you manage risk, how you increase size, how you maintain your sense of self in the face of uncertainty. Do feel free to check out our services as performance coaches. Go to our website alpha-mind.net to know more, or email us info@alpha-mind.net. Now back to the podcast.
So just to try and explain this very simply, the framework and my book, quick plug, goes into it in much more detail. The cycle is a way of looking at how we, ourself, what I call our core self, as well as our ego self, these other parts of ourselves that can be both productive and destructive, come together to engage with the external world. And that's everything outside of you. That's the markets, but it's other people, it's the organization that you might work for, your investors, your stakeholders, your colleagues, but also other parts of, perhaps, your family, friends, everything that is part of your external world that's external to you. How we engage with that, how we engage constructively with it, how we engage unconstructively or even destructively with it, at all times when we're engaged in a process. And so it looks at that, and there's this boundary between the two, which is the cycle, which moves in a clockwise direction. So imagine a cycle and a circle starting at the 6 o'clock position and going through an entire cycle all the way back to the beginning again. Okay, a 360-degree cycle. As you go through it, you go through 4 phases, which I roughly break up into phase 1 from 6 o'clock on the cycle to the 9 o'clock position, which I call the being phase, which is about how you are, how you turn up, how you engage with yourself and how you engage with the external world, and how you immerse yourself into what you're doing. So this kind of bringing you to it. What is your philosophy? What is your purpose? What is your approach? And how deeply are you engaged with that? How do you communicate with the outside world? Do you listen to the feedback that comes from that? How do you use that? So it's all about positioning yourself to do the task and sort of setting yourself up for it before you've even started with it. Okay, so that you're coming to it in the healthiest manner possible, ready to complete that task, and you're bringing your full capabilities and potential to the task. You're doing it in a way that you're being objective. You're not bringing your biases or unhelpful beliefs with you, but you're actually just bringing that part of yourself that is very capable to the task, and doing it, like we say, without being disturbed, and you're able to sense your environment. The sensing is really important here. You're able to sense the outside world. You're able to sense what's coming back to you. You're able to see, hear, feel, with almost like taste and smell, everything out there with clarity. And you do that by being curious. That's sensing. And you do that in the first part. That's the being phase. And that gives you the energy for what you're about to do. And you need that energy as you move around the cycle, because that energy is going to become eroded as you leave the being phase and start to engage with the next phase, which starts at around about the 9 o'clock position in this on this diagram, where we become triggered into deciding that we'd like to do something in theory, that there is some task we'd like to engage in. So we call this the trigger or the cue or the awareness of a need. And that can come from outside of you or within you, or usually a combination of both in some way. And this is where we go into where the action that you're going to perform in the third phase, which we call the performance phase, where you plan for that, where you prepare for that, where it's produced. Okay. You don't actually do it yet, but you are creating the production of that task in this phase. So you start to sense make. So we've talked about the importance of sensing in the being phase. In the second phase, you start to make sense of what you're sensing, what you're noticing, what you're seeing, what you're hearing. And from there onwards, you form an idea or you form a view or you realize you need to engage or do something. And then you move towards that. You plan it, you prepare for it, you get ready to engage. Now, on large cycles, that's a much longer term process. On smaller cycles and smaller tasks, that's very short term, can be very instantaneous. It can be from microseconds long on those very short tasks. You know, if you're someone who's involved in, say, a scalping type trading action or a very responsive trading approach, to someone who's engaging in the production in a much bigger sense, someone who's got a much longer term investment style view. So that's the production process, the production phase, and that takes us round to the 12 o'clock position on the cycle, where we act. This is the act point. Okay. And we act, and that takes us into the performance. I like to think of it as enter stage left, or walking on the court, or walking on the pitch. You're going out there to do the performance. You're going out there to make contact, full contact with the external world. That you're actually in touch with it. Okay. So the external world might be the market. You decide to go long or go short. You are now in contact with it. Okay. And what will happen will happen. What will be will be. You know, although you never had control, this is where you have the least control. Okay. You are surrendering any form of control now to external factors. And it's during the performance phase that you will become usually highly emotional, or at least most emotional, or at least prone to being emotional. Okay, your ego is most likely to be agitated during this phase, because this is where, you know, you can look stupid or look daft or feel stupid, or, you know, it's almost like in this phase you feel like you're being watched, even though bizarrely you're just trading on your own. It is like all eyes are on you. And that's how we feel. We are social beings and we are wired that way. Trading is not a normal activity for us as humans. But we still act as if it's something that's akin to what we would do in a normal activity. For humans, we don't turn that part of ourselves off. So we can often feel like we're being watched. And you know, through the performance phase, we will get to an outcome, but we were always anticipating that outcome. At the very start of the performance, from the moment we act, we're thinking about the outcome. And there's the emotionality builds before the performance, and it starts to decrease after the performance, but not at the point of entry, at the point of outcome. It's already building up, because before, when we're still in the performance phase, the production phase, phase 2, we're getting ready to act. And at that point, that's where our what ifs come. What if this goes wrong? What if I lose money? What if I don't make as much as I could? What if I don't put enough size on? What if I put too much size on? What if I look stupid to everyone else? What if I have regrets? What if I have fears? That's the FOMO. The FOMO comes in at that point, and it causes us to hesitate. It causes us to lose our presence, because our ability to be present, that was part of the being phase. That was part of the creation of getting ourselves into the right state. And we wanted to be present all the way around this cycle, but we lose our presence as we go around the cycle, particularly in the performance phase and even in the lead up to it. And then we get caught just after the outcome, whatever the outcome is, in the other side of the what if, which is the should have done this, should have done that, should have not done this, should have been quicker, should have been slower, should have not listened to that person, should have listened to that person. We get caught in a million should haves, okay? And these are really unhelpful. And that takes us into the final quadrant. And that's the most important quadrant, in my opinion. And it's the one we give the least attention to. It's the letting go phase 4. Okay, because we've done 3/4 of the cycle now. And we need to return, because it's a cycle, not a circle, back to phase 1 or phase 5. So we need to get back to it. We need to get back to balance, to being present, to engaging healthily with our environment, the market, the world, for our next trip round the cycle, so we can be as productive and healthy as possible as we go round it, so that we can execute our process and be present to our process and present to our purpose, why we're doing this. And if we can't let go, because things would have come up as we went through that cycle, attachments would have come up, beliefs would have come up. We would have been triggered about ourselves, our old beliefs would have come up. And often we're holding on to something about ourselves, something that's unhelpful, complex, complicated. We get caught in the should haves and the what ifs. And if we don't let go, we go back into a suboptimal cycle between the what ifs and the should haves that is stuck permanently in phase 3, in the performance phase, in the emotional phase. And we go round and round, and this is the spiraling. This is the vicious cycle. Okay. In the world of poker, they call this being on tilt. Okay. Where you're just caught up in your own headspace, in your own noise. You turn in on yourself. So this is what happens if you don't let go. And when you don't let go, we all at times get caught up in our spirals. We're human. It's part of being human. But we could deal with them unproductively or productively. In my earlier story, I was sharing my career story, and I was caught up in that career spiral, and I couldn't see things, and I was becoming defensive. I was avoiding things. I was hiding things. And it became so bad that I was considering giving up my career and doing something else. And I was making plans for that already when I had the good fortune to get into this coaching program. And that gave me the opportunity to reset. And I reset because I let go. And letting go is an incredible skill to do. And when I coach great performers or people that I see that are becoming great performers, and I notice how skilled they are at the art of letting go. It's part of who they are. It's part of how they are. It's usually a skill they've cultivated. It's not a natural skill, or it's been an adaptation to their life, but it's something they bring to their work in trading or investing. And it's clearly a differentiator between them, perhaps more so than actually their skill to pick stocks or make market calls or follow their system.
We will return to this podcast shortly. Just a quick reminder about our podcast sponsor, the Society of Technical Analysts, a brilliant organisation which help traders and analysts from across the spectrum of markets. They have many fantastic programs, including the new Technical to Trading System program. Also, do check out their brilliant home study course, and AlphaMind listeners can get a discount on that, just go to our website, alpha-mind.net, to find out more about that. You can find out more about the Society of Technical Analysts by going to their website, technicalanalysts.com. Now back to the podcast.
So as we come towards the end of this podcast, I'm going to just go into a little bit more detail about the concept of the reset. And I'm going to use an example from my own trading experience many years ago. It was a trade which I wrote about recently on social media. I think the reason I wrote about it was I brought this up in quite a few coaching sessions with people, this particular incident. And I thought it might be worth sharing on a tweet. So if I go back to the incident itself, it was in late 2007. That was in the latter years of my trading career. So I've been trading for over 20 years at that point. And I'd taken a position in the market ahead of an FOMC meeting, a Fed meeting. And the position itself was short of interest rates, so long of futures in the 2-year area, the sort of 2-year strip. And I was looking for the Fed to start moving towards an easing cycle. They hadn't at that point been doing it, but the economy was showing signs of slowing down rapidly, and I thought they were likely to move towards an easing cycle. So I positioned myself hoping that they would announce something like that at the Fed meeting, which they did. And I was very pleased about that. And around these events, whenever I put a trade on, I always leave a stop, but I always take the stop off. That's not true, actually. So whenever I have a position, I always leave a stop, but I trail the stop, or I leave it far enough away, usually that that it's only really stopping me out if I'm really wrong. And usually over events, volatile events like FOMC meetings or non-farm payrolls, I'll remove the stop for the periods around that event because there could be a lot of volatility and false stops. And on this occasion, I'd removed the stop, but I put it back on afterwards, and I went over the road to get a coffee. So I was out for about 20 minutes, and I thought the stop would be safe. But whilst I was out, there was some sort of volatility event, some sort of volatility spike. The market flew wildly in my face very briefly, and I got back into the office and I heard my broker shouting that I'd been stopped. I was very surprised. I rushed to my seat in a panic when I heard him over the box, and sure enough, the market had spiked up and spiked all the way back down. By around about, it probably equivalent, it hadn't come all the way back, but it was about 5 basis points lower than where I'd been stopped, which was a loss on my position of about $40,000. And I was obviously really angry about it. Couldn't do anything about it. But in the big picture, I was anticipating a move of about 80 basis points over the next few weeks in the market. And what I should have done in hindsight, and isn't hindsight a wonderful thing, I should have just put the trade back on. I knew I should have done. I knew it was just an event. But I thought I'd try and be clever, what we call being a dick for a tick. I thought I'd try and squeeze a couple more points out of the market, hoped it would come back towards where I was stopped, but of course it never happened. And it kind of closed that night about 10 basis points away from where I was stopped, which is now about $80,000. And, I was really angry that night. Anyway, I came in the next morning and it gapped further against me. And by the end of the next day, I was now 20 basis points offside. All because I was trying to just get an extra couple of ticks out of this trade. So I had a really angry weekend, a really frustrating weekend, uh, very disappointed, very hard to talk to for anyone or communicate with. Came in on the Monday and it gapped further again away from me, about 25 basis points now. And I was really angry, really livid. I was spiraling. I couldn't see clearly in terms of the market what was happening. And I even tried to do some, I thought I'd be cute with the trading, try and do some intraday trading to get some money back. It's never a good, never a good thing to do when you're spiraling. I was revenge trading and hope trading, so I managed to lose some more money intraday, and the market was still going against my original position, such that by Wednesday I was now 40 basis points offside. Half the anticipated move had happened, and I was fuming. I was a lot of. I hadn't lost a lot of money. I'd lost some money on the bad intraday trading, but it was just the profit surrendered, the money left on the table, that was infuriating. Okay. And then I did something that I suppose it wasn't planned, but my journal, I was an active journaler. My journal was sitting on my trading desk and I just picked it up. I was obviously very angry and frustrated. Opened the page at the last entry and I just started writing. And did a kind of brain dump. I wrote about 3 pages in about 5 minutes. And it was bizarre because suddenly I asked myself at the end of that, is the trade still on? And I suddenly had clarity for the first time. And I looked at the market and I felt not only is it still on, but actually it may have further to go than I'd originally anticipated. And then I said to myself, what the hell are you doing? Why don't you just put the trade back on now? It's still a great opportunity. In fact, it may even be a better opportunity. And put the trade back on, not in the same size. The level had changed. The I had to find a new risk level or stop level, which was further away. So I couldn't risk the same size that I could before, but I still nonetheless put a good position on, good size, and I was able to add to it a little bit further when it started moving my way. And over the next 4 weeks, it moved 80 basis points further, and I made a hell of a lot of money on that. It was one of my best trades that I can recall, and I got out pretty much close to the bottom of the move. So I ended up being really happy about this. But I've repeated this trade in my coaching stories with people over the years when we're talking about this subject, and I look back on it and I think, the opportunity was always there. It was always in front of me. Nothing negative had changed other than me doing something really stupid and then me losing the plot. In other words, me getting into a spiral between the what if and should have, going backwards and forwards and spiraling in that performance phase. And I couldn't see the wood for the trees. I couldn't see clarity. Uh, I couldn't see the opportunity that was still there. If only I'd have just gone, hey, just put it back on and sit with it. And that's what the spiral does. But I did reset eventually. It took me 5 days, but I reset. And in a way, I look back and I think, what? I could have been a lot worse. I might have never reset. I might have missed a much bigger opportunity. And I might not have learnt from it. Because I learned a lot from that. You're always learning in this job. And I learned a lot from that. Um, that's the power of the reset. Yeah, I did something daft. We all do things daft. Let's admit it. Okay? No one is perfect. We're all prone to make mistakes when dealing with uncertainty. Yes, it would have been lovely if I could have just put a trade straight back on reset. That's what some of the very best can do, by the way. When you meet extraordinary traders, and I've met a lot, their ability to do that it's mind blowing. Most of us mere mortals can't do that, but still, I was able to reset nonetheless, and that helped make a lot of money for me on that trade. And that's the power of the reset. That's the power of letting go in order to be able to reset. So what is the reset? How do you let go? It sounds easy. It's a throwaway line. We use it all the time. Just let go. And yet, if it was that easy, we'd all be doing it and we'd all do it it wouldn't be a defining skill that separates the very elite from the rest of us. But we let go so we can reset and get back to being present. You've heard me talk about that Michael Jordan quote from The Last Dance before, where Mark Van Zyl says his separator was that he was completely present. That's because he could reset in real time, all the time, in the moment, in a second almost. And this ability to reset, I talk about it in the book, but I spend a lot of time talking about letting go in the book. There's a lot to it. There's self-awareness. I needed to be more aware in that moment, but I lost my self-awareness in that trade I was just talking about. You need to be acutely self-aware. That's not always easy. It sounds easier than it is. Um, we need to get closure. That writing in my journal helped get closure. That was, for me, that's still quite extraordinary to get it that easily on that occasion. Sometimes it could be a lot worse. To accept what happened, to separate your ego from what happened. This is actually why winning and um, good outcomes can sometimes be the start of a destructive phase, because we don't separate our ego from the outcome. We attach our ego to the outcome. We believe it's something to do with our own greatness, rather than necessarily a factor of the process that lies behind our trading. We want to claim responsibility for it. Our ego does. And usually that's the beginning of the unraveling. So we need to, in that final phase, in that letting go phase, really work on separating our ego. And I always talk to people about this. Your ego is the little child within you, the child that wants the glory, that wants the acclaim, that wants to boast. And we need to sort of, it gets easily upset when things go wrong. It gets very upset when things go right. It can get carried away. So we need to, when things go right, sort of return to some sort of level of humility. When things go wrong, we also need to return to balance, because often we turn in on ourselves. We beat ourselves up. We send ourselves into spirals. We reproach ourselves for not achieving the high expectations which we felt we should. And this is where I always talk about self-compassion. At this point, you have to be good to yourself, kind to yourself, because the only way you can recover from, from failures, or what you consider a failure, is to support yourself at that moment, to not beat yourself up, to not overly criticize yourself or be too judgmental about yourself, but to be able to say, okay, all right, things happen. Don't always get it right. It's okay. Don't beat yourself up. Just calm down and move on. And that is really hard to do. It sounds easy, I know, but you try and catch yourself in the moment when you're turning in yourself, trying to do that. That is why self-compassion is so important. And in mastering the mental game of trading, I actually start a story where compassion was showed to me by a colleague, and it made a big difference. And then I thought, wouldn't it be incredible if, instead of having to wait for somebody else to show you compassion to help you get out of a spiral, if you could do it yourself? Now, isn't that incredibly powerful? So that is what then enables us to move on and reset. And that's the reset where you come back in refreshed, balanced, ready to go, ready to re-engage, immerse yourself in the job, in the market, as part of the being phase. Reconnect with your purpose, reconnect with yourself, and then go again. That is powerful. And some of the people I work with, or have worked with, or have come to know, they could do this sometimes intraday, sometimes between the days, sometimes intra-week, or even sometimes, after challenging periods. They have to do it in a much longer sense. No one, as I say, no one is perfect at it. It has to be worked at. Anyway, that is the reset. I hope you enjoyed this one episode. I hope my voice hasn't killed you for nearly an hour listening to it. I wish you the very best of luck in your own trading, whatever you're doing. And if you, as I say, if you're still listening, good luck in your own trading.
Thank you for joining us this week. We do hope you enjoyed the episode. If you want to know any more about AlphaMind and our services, please do check us out, alpha-mind.net. Thank you to our podcast sponsor, the Society of Technical Analysts, the STA. You can check them out at technicalanalysts.com. And as a reminder, listeners to this podcast can obtain a small discount on their brilliant home study course. You can find out more about that on our website, alpha-mind.net. We look forward to you joining us for future episodes, or do feel free to check out our past back catalogue of episodes on the AlphaMind Podcast.com. Have a good week.